Hello, any good people? Yeah, we're at it again and again and again and again and again. Yeah, so I'm just going to share my analysis on this move, and I don't want to lie. I closed this move a bit early because I just didn't want to lose the mass portion of the trade simply for a few pips, if I can put it that way. So yeah, that's like saying in a fancy way, I panicked. But who doesn't? So yeah, man, I am currently on the 3-hour time frame. I'm just gonna move to the daily, just to trail back onto why I initially opened this position, so that I shed more light, and yeah, why I decided to do what I did today. Oh, and just so by the way, I had a few snags with my laptop, so I had 2 trades that I'd opened prior to this one that I lost. I lost both those trades. I shared the screenshots on Instagram so that you can see. No one is immune to losing, but I like to use this phrase where I say you can't have one without the other. It's like a yin and yang thing. If you lose one, the other one ceases to exist. So it's a balance kind of thing. Yeah, to win a boxing fight, you have to take a few punches in the face. Take it to the chin. So yeah. On the daily, what I had initially noticed is the fact that we are currently in a range, but in this range we have this sneaky thing that the market does, where they create liquidity, trend line liquidity, and this trend line liquidity is somewhat of something that people aren't aware of. Like here, I'm not aware of these things, and we have to let them know that there's things like these that the market does. These moves are the same old trick, the 1, 2, 3 touch, and then it breaks off. This is just something I want to show, and you need to always illustrate your order flow, both your external and your internal structure. You need to be aware of how the market is moving, because if you are aware of how the market is moving, then surely you're going to be on the upper hand when it comes to finding these breadcrumbs that the market makers leave when they're about to make significant moves or impulsive moves. So yeah, I'm just going to the weekly, and on the weekly I'm marking my order flow. Currently we are on a bullish move, but yeah, we can see how we breaking highs here, creating higher lows here, and then creating a higher low somewhere here, and breaking these highs again, and most probably now are in the process of creating somewhat of a pullback so that we can close all of this imbalance here. We need to close all of this imbalance, but this is something that's going to happen over a long period of time. And you can see this on the daily. But even when this shape or this pullback forms, it's also going to create its own pattern, if I can put it that way, because the market moves in patterns. So it's going to create its own pattern, and every time it breaks previous lows or previous highs, it needs to come back and retest. It needs to go back to those last points of true mitigation, because when it moves impulsively, it means that either the bulls or the bears, or the bullish or the bearish move is impulsive, and it's creating gaps of imbalances. So those imbalances need to be closed, up or down, whether it's in a pullback or whether it's in a external structural move. Does not make any difference. It's just a simple law. I know my chart looks a bit messy. I don't want to remove the texts because we're going to go to a lower time frame and then I'll explain myself a bit further. So yeah, if you are watching closely, these are money banks that are being left for either later on or being taken now before they proceed to the downside, because they need to complete this move. They need to close all of this. They need to come and balance this out. All of this. So what they could possibly be doing now is they could be pulling back for more momentum, because just went over to the 2 hour. These positions are marked, and once again, it's one of those principles that ICT Trader, IPDA Trader uses, and Roland Jack, and also I forgot to mention how disrespectful of me. I forgot to mention transparent effects, because that's another guy that I currently follow. That's another young genius. So yeah, what we're looking at here is the market slowly and patiently moving to the downside. But then what I learned from IPDA is that the market tends to give you signs of when it is losing momentum and preparing for either a short-term upside, or a short-term down move. It depends on where the initial move is or where the overall move is going. If it's going bearish, like in this case, you will have small signals that show you that they're currently losing momentum now, and be preparing for a move in the opposite direction, either to collect liquidity, momentum to proceed in the overall direction, or they could be changing the overall bias and changing the overall external structural move. But yeah, you can see how these moves are. These are pretty huge moves, huge ass moves. But then when we get to this point, you can see that the moves start to squeeze themselves in. And when this happens, this means that, yeah, smart money is preparing to do something juicy. I was impatient a bit before, and that happens. So yeah, I got burnt in those two positions that I opened, but I always manage my risk. I'm only going to, because this is a demo account and it's a $20 account, I'm only going to go as far as risking about like $2. But I only risk $1 and some change. So yeah, they can never burn me out because I manage my risk. I don't play like that. I've been burnt once too many times, so yeah, I know. But if we look at the chart on the higher time frame, like the 4 hour and the daily, I had marked this LPOTM, this last point of true mitigation, and I had anticipated that when the market gets here, it's going to reverse and go to the upside. But obviously I was incorrect, and what I did not notice, or in fact I was not like actually sure about it, and I did not notice this, I don't want to lie, was this thing that I mentioned earlier on. It was, come on, oh yeah, it was all of this imbalance here. I did not see this, I don't want to lie. I did not see this because I was in a lower time frame, and I had to like, when I lost those two positions, I had to like go back and be like, Akwana, what up, man? What did you not see? And then when I went all the way back, I was like, oh jeez, there could be correction happening here. Kwana in the lungiswayo up. And if I'm actually incorrect about this whole thing, I need you guys to please update me, because hey, I need another perspective so that we can make sense of things and delve deeper, if you know what I mean. But yeah, I'm anticipating this downmove because this fib here was just to check how far we're going to trail back, but there's also these two here, because the move that actually gave birth to all of this, the one that broke these lows, is this one, but this move got its energy from this impulsive move. And there's an OB here, this OB here, this LPOTM here. This is what we're gunning for. And then from there on, because these are new lows, this is going to be a new lower high, and then we're going to be coming to close this baby here. As you can see, this is usually my first take profit, and in the sense that I take my first profit when it gets to the 0.272% zone. I usually move my stop loss to break even, and then I wait. When it gets to my take profit 2, take my stop loss, put it 50% on 38.2, and then when it gets to around about TP3, because sometimes I just close it before it hits my TP3, that's when I'm actually sitting at home watching the market. The only time I usually where my trades hit TPs when I'm not at home, because I don't like to be on my phone a lot, so I'll just open my phone and watch the trade, but I'll never be fidgety, and because I'm not a phone person that much. Yeah, I always have it, I post stuff when I have the time, but I just decided recently not to focus too much on the phone. So yeah, continuing. This is actually a pullback, because now that they took out trend line liquidity, you have to watch these things. Trend line liquidity. I just have my own way of seeing this stuff. I'm not sure if it's the correct way, but for me, this is a TL. This is a TL for me. And it's creating that rising wedge, if I can put it that way. And then when it gets to this pinnacle point, this is where the decision is made. Okay, sharp. We're going to break low and take all the liquidity here, pull back to this last point of true mitigation, mitigate all of this, because they need to balance this out. And then once they do that, it's this that needs to be balanced out. And then when they get enough momentum, they can break these lows and come rest somewhere around here on my second TP. And you also need to note that this is where this whole up move was birthed. So this needs to be respected. You need to pay homage to this order block. You need to pay your respects to this order block, because this order block broke these highs, and then it gave birth to this high move, this up move. Apologies. Let's go back to the lower time frame so that I can show you these confirmations that I had. I'll cut this out when I'm editing. Where? Okay, there we go. Okay. So this is the hourly. On the hourly, what you see is the market making gradual indications of movements to the opposite direction, and then when they do that, they don't then proceed. They try, but they don't have enough power to break these lows back here. But this is where I opened my position on this order block here. This is what's on the lower time frame, because what I noticed is the compression that I'm talking about. This compression here, it's happening on the 45 minute and the higher time frames. You can actually see it. Is this compression that's happening here? That is the compression that's happening here. It's happening here. So because the market is fractal, you can actually break it down all the way to the smaller time frames or the lower time frames and see how these moves are being birthed. Because a move is going to be replicated and manifested the same way from the 1 minute to the 5 minute to the 15 all the way to the monthly. That's just how the market algorithm is designed. I'm going to the 30 minutes. And network is slow. Damn. Okay, let's do this. I'll remove this. Okay, so 30 minutes, you can actually see that the market then starts to create a range. Starts to create a range where it has an impulsive move to the upside and then moves impulsively back down, and it's making these huge moves that are not like in correlation to how it was initially moving back here. So now here there's sort of like a tense moment that happens, or a tense trigger that it's something that triggers the market, or it puts the market into tension, where the market then needs to wiggle its way out and try and make sense or clear its head before it decides, nah, I gotta move up, because there's liquidity all the way up here. It's been leaving deposits of potential orders that were not filled, and the market then decides, once it makes all these moves that move so fluidly, when it gets here, it changes and it creates new higher lows, if I can put it that way. And then when this happens, and it happens specifically this way, where the market firstly tests itself, paces itself, and it leaves these tiny gestures, and then it comes back and it zaps them. For me, that's like a sign. I don't know how to explain it, because I haven't had enough experience and exposure to get the jargon on par. So you guys are just going to have to try and make sense of what I'm trying to explain, because this is like the initial offering, and then what they do is they then when this initial offering is filled, they then lure more traders into the position or into this offering, into this direction, and then they try and take them out, because what they're doing is they're just collecting more momentum so that they can come back and reprice and get the price at, or get their positions, hold their positions at a much affordable price, if I can put it that way. So yeah, once again, it's also a clear manifestation of when they say the market will always give you another opportunity to enter. You just have to learn how it moves and know when it is time. You won't know the exact time, but based on these confirmations, you will have somewhat of a much clearer perspective or viewpoint of how the market moves. So yeah, for me, the one thing that gave me confirmation was these order blocks here. I love the lower time frame, because the lower time frame then shows you what is happening really, because at this time is around about 3 o'clock, and my watch is set to the London time. And when this position is open somewhere here, I anticipate that this order block, because there's some liquidity laying under here, it might not hold. But what I do know is there's another order block down here that could stand steady, because the market is looking like it is changing direction. So yeah, for me, when I see this, here, when I see this impulsive move here, I think, oh damn, okay, this is an impulsive move, and it is closing this impulsive move down. But what I'm asking myself is, what about this one? And if we're closing this impulsive move here, why are we meandering here? Why are we meandering? Because this is a trend line here. It is a trend line. And another thing that I also watch is the zone and the price. Where is the price? Where is the price? Or what is the price? Because you're also looking for round numbers. Because when we get to this stage here, this price 800 here, 112 800. If you watch closely on this price and you go all the way here below the price, this is actually the Asian low. This is around the close of the Asian session. Why is the Asian session resting when it gets to this price and then coming back in? Why is it doing that? Because during the Frankfurt session is usually designed to take out either the Asian high or the Asian low. But now it is moving inward. It is not taking out neither. And then we come back into the London session. The London session also is designed to have a pullback after the Asian high or low is taken out. It will usually pull back to the 50% line of the high and the low of the Asian high, and then it'll then either proceed higher or lower depending on the initial bias. If the bias was bullish or bearish, if the bias was bullish, then it's usually gonna take out the bears first and then proceed bullish. It's gonna take out the lows and then proceed high. It's gonna take out the highs first, take out the lows, and then proceed higher. And then it'll leave some liquidity for the New York session when the New York session comes in around about like 2 o'clock. In fact, all the way to this time, to 4 o'clock London time. If no decision is made to either go higher or lower, then this means that this low, where they had this second opportunity, this low is being protected for later on. And if it is being protected, then this high is going to be violated. This Asian high here is going to be violated. That's the only thing that then makes sense. And when they then have this type of compression here, where the market is being squeezed, where the market is not moving gradually slow, and it starts to be squeezed, then that's a sign for me. That's a sign, because I entered somewhere here and then went all the way down to this order block here, to this order block, and then from this order block pushed all the way up and then meandered for quite some time into the next day, because I was watching this and I was like, yeah, you see, now they're making complete sense. Because now this Sydney and Asian session is making a whole lot of sense. Because now the Sydney session is sitting beautifully on somewhere above these highs, like slightly below these highs. slightly below these highs. There's liquidity sitting here, but then they decide not to take it, and they decide rather to come back and take liquidity at these lows. That's a definite sign that they're interested in going in the opposite direction. I'm not sure if I'm explaining it correctly, but these are the kind of things that I see. And then you have your Fibonacci curve confirmations, where your order blocks are sitting. If you're anticipating a bullish move, your order blocks are sitting below the 62% zone on the Fibonacci retracement. And if you're looking for a bearish move, then they're sitting above the 62% zone on the Fibonacci. And you can tell there's two order blocks and they're sitting beautifully. When everything links up, when everything matches up, when we get to a round number and we go in and out of that round zone, around, in and above and below the 800 line, or the 800, the 112.800 zone, and we don't show any signs of continuing either further because this was a bearish move, then you can bet you're behind that market makers are eager for something. They're eager for something in the opposite direction, because you can tell here. Check where the price is. Check where the 50 is. 750, 750, 750. Look at how the price reacts at 750. Look at 750 here. Look at how the price reacts here. And look at the crosshair. It's at 751. These are signs that, yeah, we came to do what we needed to do, and now we are fixing to do what then needs to be done contrary. On the contrary. You understand? Because it's a game of balance. But yeah, man. Still trading the same old demo account. I'm just not logged in now. And this is my manifesto for this given time of the market, because I might not be able to explain it the way that I initially saw it to begin with, but it is what it is. Once you get to see these things, it becomes like second nature. And once again, not saying you're not going to lose, you are going to lose, but when your trades are calculated, the profit always outweighs your losses. When your losses start becoming more than your profits, then you need to re-evaluate what you're doing. So yeah, I don't want to make this any longer. Like the legends always said, good luck and happy trading.